Joining us now is David Lennox, resource analyst at Fat Profits. David, thank you very much indeed for joining us. I mean, we were just talking about coal beforehand and how China has, of course, a limited stocks of coal. Does the prices keep on going up here, and at what point do we get demand destruction?
Look, I guess basically our outlook for coal is that thermal coal especially will continue to rise over the coming years. We do believe that the power requirements in China, in that country alone, will be significant going forward as their population continues to urbanise and the cities in that country continue to grow. When you then throw in the other countries around the world where we are seeing significant lifts in power requirements, i.e. Africa especially, that then adds, I guess, a second wave to where we think will push prices for coal on the up in the coming years ahead.
But is there a price point where it just becomes untenable?
Look, yes, I guess one would have to say at some point in the future coal will potentially reach a price where its use will be certainly diminishing. But at this point in time one would have to say the basic technology that we require to generate electricity is either thermal coal or uranium, and we know unfortunately uranium is at the moment on the nose, so that leaves thermal coal to be the base load for power generation. So while that technology is in place, we do believe that the coal prices will stay substantially higher and continue to move higher as the years progress.
Let's move elsewhere in the commodities complex and have a look at oil, just up to a one-week high at the moment. Are we sort of levelling off and trading in this range at about $100 a barrel for WTI, West Texas Intermediary oil?
Look, again, when it comes to oil, you have to look at what's happening in the United States. They are the biggest consumer of oil product on the globe, and we do believe that we have seen a significant decline in the use of oil product in the US, basically as the Americans have come out of driving their vehicles because of I guess, high unemployment conditions. If we do see the US consumers start to return to confidence and we do see the US consumers start to return to their vehicles, then I think we will start to see a more solid and sounder upward price movement, certainly towards our target of 115 WTI. While we're seeing the figures at this point in time, especially the employment figures in the US, toing and froing between upward trend and a weakening, or not so much a weakening but a softening, oil I think will probably trade in the range between $100 to $90 WTI.
David, let's quickly get to the precious metals side of things as well. I mean, gold well off the highs that we've seen, and silver even more so, very quickly here. You know, are we just having a gut check before the rally commences again?
Again, we've kept our gold target at $15.90. We do believe that the factors that have pushed gold higher over the last 6 months are still in train, and that's especially a potentially weaker US dollar going forward because of their debt problems. Having said that, however, we do believe that the strength that we are now seeing in the US economy starting to just bud itself will weigh on it.
David, thank you so much for joining us.